What is up, guys? Roger here doing another live. Rates have dropped under 5%. Wall Street Journal article from a high of 5.8 from mid June. So, mid June, we hit our peak in mortgage rates. And since then, we have dropped almost a full percentage point, just under 5%. So if you are looking to buy a home right now and you have really, really good credit, you're going to look at under 5%. Actually, VA loan, if you're a veteran, interest rates are amazing right now. Interest rates are around 4.25, 4.5. Again, much better from where we were about 6 weeks ago. So that was kind of the peak. Things are getting a lot better. So obviously that's great. Um, we'll see what happens in the future. If we head towards this recession, then rates might be getting even better. And I was just doing some research on the different markets. I was looking at, for example, where I'm from in the San Fernando Valley in California, cities like Tarzana, Encino, Woodland Hills, Reseda, Van Nuys, Sherman Oaks. And there's a ton of properties that have been on the market over 60 days. So now is a great opportunity if you've been on the sidelines, if you've gotten outbid over the last, couple years, haven't been able to land a property. Now is a great time to get in, get a really good deal because again, there's been so many houses on the market. There's 137 houses in the valley in these cities. 137 houses that have been on the market over 60 days, and a good majority of them under $1 million. A bunch of them around 1.1, but you could get at least 50 different properties at a million or less, which again, we know if you want to live prime time, you want to live in LA, you want to live in the valley, which you didn't used to be prime time, but now, even the slowest house in the valley now costs $750,000. So, yeah, guys, now is a good time to get in. Now, if you're a seller in this market, you better price your house correctly because if you think the market is what it was 6 months ago or a year ago, and you think you're going to get 25 offers over asking, you're just going to end up reducing your price. It's going to look bad when people see that many price reductions. It's a huge red flag. I wish I could share my screen here. I'm doing a live. I don't usually do lives. Let me see if I can edit something. No, I can't. So I got to figure out how to share my screen so I could show you some of these properties. But yeah, if you're a seller, you better price correctly. Rates on tomorrow's a big day too. Tomorrow we got the jobs report coming out, a big jobs report, which is going to indicate, if we're going definitely towards a recession, which again, we probably are. But this jobs report is going to tell us how many layoffs there's going to be, how many companies are not hiring, firing, and that's going to just push us quickly into the recession. If that happens, when we go into a recession, we'll see what the Fed does. The Fed might reverse course, pivot, start lowering rates. They did announce yesterday, they did hint that they're going to continue raising rates, but we'll see. Anything can change. They say a lot of things, but you can't believe everything they say. You have to go based off their actions. So we'll see what happens. If we're going into a recession, we could see rates come back down. And again, we could see a lot of competition again for these same homes back during just like the pandemic, right? Just like the pandemic when rates dropped and everyone was, the market was flooded with money. Rates were 2.75, 3%. Every house had 20 offers. If rates are under 5 right now, they're like around 4.99 if you have good credit. If that drops to 4.5, 4.25, you could start seeing more competition. So right now might be a sweet spot to get in, get a property at a good discount. Like I said, do your own research. I just searched my city of Gilbert, where I live now, San Fernando Valley in California, where I grew up, and there's tons of houses, tons that have been on the market over 60 days. And those are the ones you want to target to get a really, really good deal. So again, this could be a really sweet spot to get into the market. A lot of people think there's going to be a housing crash. So what I sent in my last newsletter as well as I mentioned, um, diversify your content. Patrick Bet David talked about this in his recent episode in his housing market crash video. And he said to diversify the content you're consuming because, I'm a mortgage broker. I'm bullish on real estate long term. So I'm biased. I think buying real estate in the long term, you're always going to make money. If you bought and held real estate for 10, 20, 30 years, you are undefeated. You have not lost. You will not lose, in my opinion. Um, it's a slam dunk. You just can't beat that investment. No one has ever bought real estate, held for 20 years, and lost money. It just hasn't happened. So it's literally undefeated. So that's where I'm coming from. That's my perspective. But maybe talk to different uh professions, people from different professions, and see what their take is and make your own decision. But that's how I feel. I'm bullish on real estate long term, and I think the sooner you get in, the better. I don't think prices are going to be lower in 2 years, 3 years, 5 years. Again, there's always going to be pockets of the country where it was overinflated, people overpaid, and those correct. And you might see home values drop, okay, in certain pockets, in healthy parts of in healthy markets across the country where people didn't overpay like crazy. I don't think you're going to see home values drop. There are some areas like Glendale, California, even where I have my Airbnb in Sedona, Arizona. I heard of stories of people paying $700,000 over asking. So yeah, you might see some drop in values in certain pockets. Glendale, California is another place where every story I heard from realtor was 2, 3, 4, 500,000 over asking on every single house. Actually, I just read another report that said actually Glendale, California has the highest population of homeowners with over 50% of their income going towards housing. Again, dangerous. That's a dangerous game to be playing when you have a very, very high percentage of your income and so many people in that city paying over 50% of their income to their mortgage. That's craziness. So yes, there are different pockets, different markets that may drop in value, but healthy markets where people didn't overpay like crazy should sustain and keep going up. So that's why I always say it's better to get it now than wait a year, 2 years, 3 years, because I don't think homes are going to be cheaper. It's my personal opinion. Let me know what you guys think in the comments below. And thank you guys for watching. I'll see you guys on the next one.